We let volatility come our way, and we welcome the volatility. When discounts widen out, we view that as a buying opportunity.
Bumpy rides don't have to be uncomfortable. Steve O'Neill of RiverNorth Capital Management says closed-end fund market volatility may present opportunity to investors, especially in the area of fixed income.
In the closed-end fund market, the volatility has certainly impacted fixed income funds the most. We saw discounts widen last summer and deeper into the fall and winter. And what's happened this year is, despite positive performance and declining rates, discounts really haven't narrowed very much. And so we think that that's a great opportunity to create a diversified portfolio. You can target funds with long duration, short duration, high credit quality, low credit quality. You can really build a diversified fixed income portfolio at discounts that are often 90 cents on the dollar.
O'Neill says volatility has been higher in the closed-end fund market than in the broader markets. He calls it a disconnect that may be temporary.
What's interesting is the retail closed-end fund market has been very volatile, but the cash bond market isn't. You see high-yield bond spreads at record lows near 2007, yields near record lows, and so there's not a lot of volatility in the capital markets. The VIX is fairly tame, the cash bond market is fairly tame, but you see a lot of volatility in the closed-end fund market, which is an interesting disconnect between how retail investors view the opportunity and what fixed income investors are doing in the institutional market. We really like to focus on these opportunities because we think that disconnect won't last.
As O'Neill watches and analyzes closed-end fund market volatility, he sees potential opportunity for investors.
Clearly, we focus on the discounts and absolute volume. We saw discounts widen out significantly in the fourth quarter, and volume spiked to, in many cases, $1 billion trading days. And that's a pretty big deal for the closed-end fund market. It's very atypical for us to have the opportunity, or investors in general, to see 10% discounts on asset classes that are very popular in the institutional asset market. You can see non-agency bonds that are very popular with institutional investors. The closed-end funds that own these securities are trading at 90 cents on the dollar. And it's interesting, and one of two parties is going to be correct. Either the retail was, ahead of the curve, thinking that the cash bond marketility wasn't reflecting adequate risks, or we believe, personally, that the retail market has the fear is overblown.
Steve O'Neill of RiverNorth Capital Management sharing a perspective on why he welcomes volatility in the closed-end fund market. For more information and data on closed-end funds, visit our sponsor, CEFconnect.com, the authority on closed-end funds. Thanks for watching. This is Closed-End Fund News.